All right, the proposed debt ceiling deal includes Pentagon budget cuts that could have a huge impact on defense contractors like Lockheed Martin and Northrop Grumman. We're seeing the names down today. The first $1 trillion in cuts takes 5% out of national security budget in 2012 and 7.5% in 2013. And of course, there's this commission they've set up. If it doesn't get the cuts done by the fall that it needs to, automatic cuts will take hold in defense, deeper cuts than that following. So joining us right now is Citigroup analyst Jason Gursky. He covers the defense stocks. We call him a Bloomberg best because he's been one of the best forecasters, most accurate forecasters on Northrop Grumman. Jason, thanks for joining us. Let me ask you, first of all, what you think about the cuts that are coming. I mean, you knew there was something in the pipeline. Is this better or worse than expected?
To be honest with you, this initial cut at this deal looks like it's in line with expectations. The president had talked about a $400 billion cut to defense spending back in April. Importantly, I think investors should focus on the fact that these cuts are lowering the growth rate of defense spending in the out years as opposed to actually cutting nominal spending at this point. I think that's something that is oftentimes overlooked. Now, this is obviously a two-step process, and we still have to $1.5 trillion in cuts still to come by the end of the year. The composition of those cuts will be very important. But at this point, I think the cuts are in line with expectations.
Hey, Jason, what if the triggers kick in, though? Then could this be problematic?
Yeah, clearly. I think if the trigger kicks in and there's an incremental $600 billion cut to defense spending, you'll go from very modest rates of growth to flat to modest declines in nominal budgets for the DoD over the next 10 years. And then as far as defense stocks are concerned specifically, I think the big question then becomes, what's the composition of the cuts? Does it come in military personnel? Does it come in operations and maintenance? Or does it come at the expense of the procurement accounts, which is where the defense contractors make their money? I think at this point, given what Secretary Gates had to say before he left office and what Ash Carter, the Assistant Secretary of Defense for Procurement, has said since he's left office, the vast majority of those cuts are likely to come from the O&M and the MilPERS accounts and not so heavily on procurement. So that's not such a bad thing for the defense contractors.
Does this put you in a position to make a bet about what this congressional committee can come up with? Because we've heard a lot of people in Washington say it's very unlikely that they let those triggers be pulled by no deal in the fall.
Yeah, I think clearly there will be some more defense cut spending to come through this process. I think the Republicans will probably push back on the notion of going all the way up to $600 billion. Clearly, the Pentagon is going to have to dig deep to find out where it can make some incremental cuts above and beyond the 350, because as a reminder, that's actually lower than the $400 billion that the president proposed initially. So there's probably a little bit more to go for the defense group, but I don't think it's going to be an incredibly dire scenario for the group.
Jason, yeah, you definitely don't sound upset here. Yet you have been lowering some of your target prices on some of the top defense companies over the past few weeks. Why was that?
What's come to realization for myself and I think a lot of investors is the fact that the operations tempo, both in Iraq and Afghanistan, is now really starting to have an impact on the defense contractors. We have seen budgets for the OCO or the supplemental come down over the last couple of years, and that is now making its way through the revenue lines of a lot of these companies. While they may not have direct exposure to the OCO, they clearly have exposure to the ops tempo of these wars, and that's now starting to come under a bit of pressure as we exit these theaters of war, and that's why I took down my estimates here most recently.
Although bottom line, Jason, I mean, if we need to fight a bigger war or another war, I mean, clearly the military isn't going to be constrained by budget cuts if we need them.
No, I think that's right. The threat environment persists. We have an administration that is very dedicated to ensuring that our force structure is in place and ready to fight today's fight as well as tomorrow's fight. And that's why I think what we're talking about here are nominal, a slowing of nominal growth and not actual deep draconian cuts to defense budgets.
All right, Jason, thanks so much for joining us. Jason Gursky, they're talking about defense stocks.